Welcome back, Alpha Hunters. The markets are closed for the week of February the 16th. Real quick, I will not be around this next Friday or the following Monday. I will actually be traveling, a little vacation time. So I will get a market outlook kind of end of week recap next Thursday out, kind of some conditional things, maybe on how we possibly might look on Friday. But anyways, I won't be around the end of next week, but I will get a market outlook out at the end on Thursday. So let's just go and review what went on this week because we did have plenty. So I'm going to kind of go through as I kind of did last time when we had a lot of news during a week and talk about as we got information throughout that week. Monday was a really quiet day. We had like almost no gap. It's kind of surprising. We typically have a little bit of a gap there on Monday, but we almost had nothing. Nice little pump early on. A little bit of a double top here intraday. Sell down there in the afternoon, kind of ending a little negative there on the day right before we got CPI. So Tuesday morning, huge gap down. What was brought on by that was the inflation data that we did get. We got year-over-year inflation rate came in at 3.1%. The market was expecting 2.9%, but it was down from the prior month of 3.4%. It's still a little higher than what market participants were expecting, and as you know, that is a big deal. As well, I mean, a lot of people in the marketplace are expecting the Fed to be cutting rates here in the first half of the year, or at least starting to cut rates here in the first half of the year. And it's hard to do that when inflation doesn't drop fast enough to do that. So you can see core inflation also came in at 3.9%. The market was expecting 3.7%. So, and that was flat compared to the prior month of 3.9%. So we had a little bit of a gap down here. That's actually not even a little bit. It was a substantial kind of gap down, about a 1.25% gap down. Got a little bit of a bounce there in the first 2 hours of the day when we just rolled over pretty hard until we got to the last roughly 30 minutes and a very sharp bounce. Okay. Go through some things a little later on. We'll talk about the significance of Tuesday. Very important. Wednesday, we kind of had a little bit of a continuation on kind of a gap up there on Wednesday following that bounce that we got Tuesday afternoon. So nice little gap up, pushed a little bit higher, then kind of rolled over, pulled back pretty good there in the first couple of hours, and then just slowly climbed higher. Wasn't looking too good there in the middle part of the day. And, we typically normally see after we pull back, have sharp pullbacks like we did on Tuesday. Usually, typically the day after, we see very sharp, strong bullish days the day after we kind of make a bottom or a bounce. And we weren't really getting that too much on Wednesday. So it was good that we saw, a little bit of bullishness towards the end of the day, kind of in towards session highs there on Wednesday. Thursday, a little bit of a higher open. Chopped around sideways for a bit, pushed higher middle part of the day, and just kind of flattened out towards the end of the day. Friday, we got some more data. Oh yeah, also the February 15th that morning we got retail sales data, which was hugely lower than expected. The forecast is calling for negative 0.1%. It actually came in at negative 0.8%. So, and that was down from prior month of 0.4%, a positive 0.4%. So Thursday, that was some of the data that we got. It wasn't really good, but yeah, it's just kind of how it goes. PPI, we got Friday morning, 0.3% was the number. The market was expecting 0.1%. Prior month was negative 0.1%. So both of the inflation data metrics that we got this week, CPI and then PPI on Friday, came in higher than expected. And market didn't like that too much. Not as bad as Tuesday CPI. Sold down a little bit there in the first 40 minutes or so. Bounced into the middle part of the day. It was looking pretty good. Got off the live stream. But there was other areas of the market just weren't looking good. I was wondering if we were going to see a sell down at the end of the day. I didn't really mention it, but we did see a sell down. So last hour and a half kind of just broke down, sold back down to the daily lows on Friday. Didn't really have a huge change too much from where we ended last week to where we ended this week on the SP 500, on the SPY, but we did end the week negative. All right, take a look here at sector performance for the week. Well, one thing you notice is XLK is underperforming, the big underperformer. And you can see, really, it didn't do anything after Wednesday's open. Like after Wednesday's open, it opened about here, and it did nothing for about 2 3/4 of a day, and then that last bit on Friday just kind of sold down. But we still saw XLC, XLY underperform those other sectors of big tech area, and you can see the XLC is actually positive here on Thursday, or at least outperforming the SP 500, and then it had a pretty bad day there on Friday. Real estate kind of in line with the market there. Staples outperforming, and then everything else performed beautifully. Industrials, financials, healthcare, utilities, energies, and materials all looking really good to end out the week. And you can see just how well things started really doing on Thursday. You can see a lot of uptrending lines there on Thursday. A lot of things performing very well. Now, what I'm going to do is I'm actually going to move the beginning of this to the low that we put in on Tuesday. We'll see kind of just how things performed from that low on Tuesday. See tech still underperformed quite a bit. Staples, communications underperformed. Discretionaries, industrials, healthcare, utilities, financials, real estate, energies, and materials were the ones that outperformed from that low that we put in on Tuesday. All right, take a look here at the VIX daily. You can see we're still just kind of listening to steady uptrend. Tuesday, we had a huge spike here on the VIX. What's really kind of concerning here on the VIX, though, is people are kind of selling volatility as we're running bullish. And not to say that's not a bad idea, but I think this go around, it's going to be a bad idea. We've had some time periods where we've barely seen bearish days, like barely seen bearish days. And we've seen some pretty good spikes and pretty good humps on volatility here over the past couple of months. And then Thursday, the fact that we were breaching all the way up to almost 18 on the VIX, we were only down, like 1.5–2%. It's not like we were breaking major trends. We weren't, really breaking down the 10 EMA on the daily. So it just seems like there's a lot of leverage around the volatility and muted volatility, and it's something that's going to be one to watch. Let's say one to watch here coming soon. The DXY, the dollar index. Well, basically the main thing of the week is we had a huge pop higher here on Tuesday, and then we had a very strong pullback there Wednesday, Thursday. Thought we were going to bounce there on Friday, and then it came right back down. As we faded after PPI, we got a bounce, and then it just kind of faded throughout the day. The dollar's an interesting one here. Definitely thought we would have bounced. Maybe we will continue to bounce here as we go into early next week. If we get below the 20 EMA and these lows here, it probably wouldn't look good for the DXY. But for now, that Tuesday breakout is still important. Still kind of in an uptrend. Still could be bouncing off of these highs that we had back in kind of early mid December. So for now, still would say dollar looks okay to be bullish on, but the fact that we came back down on Friday was not the best look. GLD, the gold trust. Well, we had a pretty good breakdown, obviously, with dollar breaking out there on Tuesday. So we had a pretty good breakdown there on Tuesday, Wednesday. We climbed back higher by the end of the week. We saw dollar drop off there Thursday, kind of dropped off there on Friday. Gold bounced back up. Now this is kind of coming back to kind of these breakdown levels, kind of where the moving averages are also. So yeah, we might see gold. That could just be the retest. Maybe we continue to drop early next week. I don't think it's gonna be a big bearish move. It just might be a slow trickle lower. I think you're still going to be just buying dips on GLD. You'll be fine. Here's a look at the 10-year yield. 10-year yield also had that hugely strong pop on Tuesday. Very strong move. Getting above this 4.2 level. Retested into it all the way on Thursday. Throwing a nice little lower wick into also that 10 EMA. Just very convenient. Happened to be about the same spot. And then, continued higher there on Friday. A little bit of an upper wick there on Friday. So it might consolidate here for a couple days, maybe early this next week, and then push higher. I have to see. But for right now, it looks like we might just consolidate here for a couple days, and then maybe we'll see how this sets up. But the fact that we got the breakout, we got the retest, we did not roll over and close back below 4.2 for the week. This tells me we're going to go back. We're going to continue probably higher as we kind of continue to go forward here, which might not be best for equities. 10 and 2 yield curve inversion kind of just slowly pulled back throughout this week. Now we did throw a little bit of a lower wick here today. Now this is one on this relationship, it doesn't typically throw wicks, okay? And typically if it does, we it's kind of like pivot points, right? You got a little wick here, potentially a pivot point, because we had one back over here on January 2nd, a little bit of a pivot point. We kind of rolled over for a day, didn't last. And then once we got above it, we screamed higher. Then we had some lower wicks back over here, but once we got below those, we kind of rolled over. So we had a little bit of one here, but we rolled back down, So, if we continue, come out this next week and we see the 10 and 2 kind of continue to go higher, that could just be, a little bit of a false breakdown, a little bit of a lower wick, kind of a little bit of a pivot level. Maybe we continue higher. So that'd be the 10-year yield would start to outpace the 2-year yield. HYG tried to break down with yields popping higher there on Tuesday. But they snapped back pretty good there Wednesday, Thursday. Just pulled back into the moving averages. Still, it might be consolidating, but we got these lower highs kind of coming in here. Kind of mentioned this on Thursday. We have these declining highs kind of coming in here. It's not going to be the best spot there on Thursday to be getting bullish on the HYG. Be very careful here. And there we go. See a little bit of a drop there on Friday. Man, it's going to be very interesting to see what happens here on yield and some of these bonds early part of this next week, but that does not look good. Obviously, we tried to break down there on Tuesday. It didn't exactly hold. We did get below the lows of early January. We did bounce, but we bounced up to the moving averages, downtrending line. Maybe we roll back over here. So if that happens, bonds will probably just be breaking down. LQD, well, speaking of bonds breaking down, LQD last week was breaking down. It wasn't super aggressive breakdown, but it was breaking down. It was getting through some of these lows that were put in back in January. This week definitely broke down pretty hard on that Tuesday. Quick retest higher into some of those levels. The moving averages rolling over. Probably just expect this thing to keep dropping off here. TLT, kind of same thing, not as bad. Although the TLT had a pretty rough January, very sharp end of January bullishness, but just kind of has continued to fade. Got under that little support level that we had back at the end of January, broke that down, this week, a little bit of a bounce, kind of a retest into it. So we could, that could have been the retest. Maybe we're just going to roll over here. The fact that we had a weekly close below these levels kind of makes me think that we're going to do that. Moving averages probably just continue to push these down while the yields get pushed up by moving averages. So it kind of just makes sense. So we'll see how that looks going forward. Now, this is something that we kind of looked at throughout this week or earlier this week. The triple Qs, in its relationship to the China triple Q. So basically U.S. tech versus Chinese tech. And this is basically the entire performance going all the way back to 2009. You see how much it really ran up here. Basically kind of since COVID was over. We got into 2021, huge bullish move, chopped around in 2022. Huge bullish move here in 2023, and I'm not one to say a top is in. There was definitely different points in time in 2022 where we had pretty good top action. Then we went on that run in 2023. But the thing I'll say here, I'm not gonna say I called the top here. I'm not gonna be that lunatic. But it's definitely one where you got to look at the different stocks, and I guess that's kind of the point of it, right? If you're looking at U.S. tech equities, they're priced almost to perfection. If you're looking at like Baba or Baidu or JD.com, they are so cheap. China has been beaten up. We've talked about that before on the channel, definitely on some of the live streams. China equities have been beaten up, and China tech stocks have also just been annihilated. They have not gotten any kind of bounces. They are at hugely discounted levels to like free cash flow, which is an easy metric to judge valuations. So it's very reliable as well. So we are starting to see that rotation from this huge bullish move that we had in January. We're starting to see a lot of that rotation kind of come in this week, or really here over the past 2 weeks. So I'm not saying completely pull out of U.S. equities, but I'm just saying that there are some really, really good rotational areas out there in the market that are not U.S. tech. Like U.S. tech is very expensive. All right, so enough of that. Let's just take a look at these 5 markets. RSP, very sharp bounce back. Now, there's going to be something you're going to notice across these 5 ETFs, but Monday, very nice move higher. You're looking really good there, RSP. Tuesday, gap down, not so much. But Wednesday, Thursday, look at this bounce action we got. Friday even, taking out Thursday's high, even though it didn't hold and it got hit pretty good there in that afternoon sell-off. RSP was looking really, really strong to kind of end out the week, and we saw a lot of those sectors kind of rotating there on Wednesday, Thursday, and Friday as we looked at that sector rotation. This was a very good tell of maybe there is starting to be people pulling money out of some of those equities of big tech. DIA also didn't do too bad. Didn't bounce back nearly as strong, but it doesn't look as bad as some of the other ETFs I got here. DIA though, nice bounce there on Monday, huge drop there on Tuesday. Wednesday, a little bit of a settle out. Thursday, nice push higher. Friday, kind of just hanging out, but didn't really break major trends. Just kind of more of a pullback, snapback, bouncing kind of off the 20. We kind of bounced there before. So yeah, you know what? I mean, I wouldn't be surprised if the DIA kind of continues higher. High quality names in that ETF. Yeah, I wouldn't be surprised if we continue higher. The only other thing is there are some large, big tech names in the Dow Jones now. So if they get to selling off or they start to underperform, that probably does kind of hold the DIA back a little bit. Take a look here at the IWM. You notice it kind of looks like the RSP. Very strong Monday. Huge bearish day there on Tuesday. It was down 4% at the close. Wow. Hugely bearish day. Wednesday, snapback day, up 2.3%. And then up 2 2/3 on Thursday, getting back to the weekly highs. Now, Friday didn't take out the weekly highs of Thursday, but I mean, the fact that we got back to those weekly high levels, RSP, IWM are the only two out of these 5 that I really kind of monitor that got back to those Monday highs and took them out. So, kind of an interesting one. Taking a look at the Qs, like I just mentioned, there's only 2 that got back up to those Monday highs. The Qs didn't even come close. And you can see kind of how bad they kind of performed. Like with that huge gap down there on Tuesday, and then that bounce back that we had on Wednesday. Yeah, it was very sluggish after that. Didn't really do a whole lot to XLK. We'll take a quick look at some of those big tech stocks. They were underperforming pretty good. Qs though, really looked different there on Friday compared to the other 3 we've already looked at. But for now, what I would be looking to do is move your stop losses to just below Tuesday's low, and I would do this for all 5 of these ETFs. Like that is where you're probably moving it, and then you're maybe looking to buy the dip probably at this lower level, maybe these tops here. You're probably gonna look to buy the dip, and possibly then once you do that, you're probably looking to have a stop loss below this level. But if we make it through all that and we get below that level, you're probably then going to be looking to be bearish. But until that happens, I think right now you're just going to be protective, and that's why protective is on the thumbnail. SPY, same kind of deal as the Qs. Tuesday, that's where your stop loss is. This is going to be a hugely important level. You're probably going to look to buy the dip off of these 2 tops that we got here around 476, 478. If we do roll over, take out the stop loss level below Tuesday low. But if we get below that, that's probably going to be the bear switch. You're probably going to be looking to start to be a little bit more bearish and definitely a lot more protective. But for now, it definitely was not performing well, and a lot of that has to do with big tech. So speaking of big tech, I'm going to run through some of these stocks real quick. AAPL here, and you're going to notice a very common thing. AAPL got hit all week. Like, look at this, every day. One of the 2 largest equities in the U.S. markets, like just every day. Every day is down. Like, what do you think is going to happen this next week? Every day it was down this week. It didn't really bounce all that much on Wednesday and Thursday, and you see Friday even sold down. So it's not looking good, and that's one of the largest ones out there. Microsoft, look at this thing. Huge gap down there on Tuesday and did nothing as a way of bouncing there on Wednesday and Thursday. It bounced a little bit there on Wednesday, but Thursday didn't. Thursday sold back off. Friday ended at the weekly lows. This doesn't look good either. And then you have a large air pocket here back down to the 50 EMA. So Microsoft not looking too great there either. What about Alphabet? Alphabet doesn't look good. Alphabet basically got hit every day. Wednesday was actually positive, but got hit pretty much every day. Huge gap down there on Thursday. Also, I don't even know what really spurred that. I think it had something to do with OpenAI, but huge sell it down day there on Friday, in and at the daily lows, weekly lows there. So yeah, you're probably expecting that's 3 now of these big tech stocks that you're looking to probably see sell off even further into next week. Well, what about Meta? Well, Meta looks pretty good. It hasn't broken its trend. Obviously, its earnings was pretty good. It's continued to kind of hold its momentum up, but that's one so far that looks a little bit different. But they definitely did get beat a little bit, beat up there on Friday. So we'll see next week. But I wouldn't be surprised if if the others are selling off. I wouldn't be surprised if Meta kind of plays bandwagon and just kind of sells off too. And what about Amazon? Well, I mean, Amazon had a pretty good gap down there on Tuesday. Bounced back pretty good there on Wednesday. Thursday bearish. Friday bearish. I mean, Friday was down, it was a negative day. So it's not all great out there. And the SIG 6 is what I'm calling them. No longer calling it Magnificent 7. Help me sell this. I'm going to make t-shirts. No, not really. But, it's all about the SIG 6. They just have too much weighting out there for them not to be important, not to be, going along in the in the bull market, sorry. So if they're not going along with it, it's going to be very tough to continue to go without them. And the last one in the SIG 6 and the one that's been holding up quite a bit of the market, so far this year, Nvidia, not a bad week. Not a bad week. I mean, pretty good gap down. You can see this 10 EMA definitely just screaming higher. Kind of hasn't taken out that Monday high. It's gonna have earnings this next week. I mean, this is gonna be an interesting one. This will be Wednesday after the bell, Thursday trading day. Is it gonna be like it has been? That's gonna be the interesting one. If we have a pretty good gap down and the party's over, then we'll probably see a lot of things sell off. If we gap up significantly higher, we'll probably just sell off. If we kind of are in this level, we might see the buying continue. Outfitters, that's all I got. Have a great week. Take care.